Officially, good morning. Happy Sunday. Welcome out to the Options Income Launchpad Sunday Market Insights. My name is Scott. I will be your host. Zoom sound stopped working. Oh, you're right on time, John. Right as we were waiting for you. That's what happened. That sounds cold. It's colder in Georgia, though. I guess it's actually 26 right now, but it'll be like 65 this afternoon. So, Utah's got a good fall. A little chilly at night. Okay, as always, let me remind you what we do is for education and illustrative purposes only. Nothing is intended to be a recommendation to buy or sell any security or financial product. We're not brokers. We're not advisors. We don't give advice. Any decisions made should be at your own risk. Yada, yada, and yada. Okay, what are we going to do? Obviously, we're going to posture, and we're going to AI posture at the same time. I'm going to try to keep a faster cadence. I'm learning. I forgot how to do it. I'm going to practice it for next time. To try to find a faster copy, cut and paste the charts. But it'll be okay for now. It'll be okay. In fact, I'm going to get this ready. It's going to pop up in front for just a second. I'm going to move it to my other screen. Bear with me. Bear with me. Steven, are you working on your new Fancy Falcon trading computer? Isn't that what you got? Fancy? Yes, he says. Amazing. And how is it? Oh, Bob also has one. Bob Rowland has one. Loves it. I have a new computer, and I've been slow setting it up, that I'm still using my old one. I think I'm gonna spend a little time on that today too. Super fast. Good morning, Vladimir. Good to see you. Market posture, AI posture, economic calendar, more news that we're not expecting to get. What are the odds? What are the odds on the government shutdown ending this week? Would you take the over or the under? Yes or no? This is my quick poll. Under is no. Over is yes. Or you can just put yes or no. Tony Z says no. Steven says no. Ooh, Sandy and Bob say yes. As does Greg. Kevin says no. We're 50-50 so far here as a group. I saw Trump put a post out about giving the money straight to the people and not to the evil insurance companies. And I'm like, wait, is he moving towards a single payer system to catch us up with the rest of the world? Recognizing that insurance companies, to make profit, have to deny claims and try to pay as little as they can for people's health. It does create kind of a conflict of interest, I would say. They make more money the less they pay for people's health care. So, maybe. All right. 50-50. It's how we finish. That's pretty interesting. Sector searching. We've added. I found, but I haven't added it yet. I should add it. I did find my consumer discretionary additional list. So I have industrials and consumer discretionary. So we've improved our watch list. I think we have it, but maybe today will show us differently. I think right now it's technology, it's industrials, it's consumer discretionary. I think that communication services continues to struggle, and we have a few good ones there. I think that financials continues to struggle, and we have a few good ones there. But we'll be open-minded. Let's see what happens. We'll build our opportunity list for the week. We will. What else will we do? Sorry, I got to get my pen to write here. So, come on, pen. There we go. This is 11/9 already. Jeez, how is it? November 9th. And we will talk about this week's trading plan section of the week, section 3, trading rules, system development. All right, let's get to it. Let's get, wait a second. Wait, what's going on? Performance problem was detected. No. I just reset. What is going on? Real-time data. Are we good? Yes, we're good. Don't worry. Don't worry, we're good. Actually, let's step this back to 3-year weekly. Okay, I'm actually going to close this, move this, move this. Let's get ready to get started here. Let's take this down to 50 and grab this chart and okay. Long-term analysis is where we're going to start. This week's chart for analysis 11/9/25 for reference. Okay. And boom. My score stays the same. It touched up here. Let me define for you. Let me define what I need to see. Let's put this at 11/9. Whoops. 11/9. There's it's going to take kind of a lot to get that to a 1.75. I can't remember the last time I even scored a 1.75. 1.5 is as high as it got during all of the bullishness we saw last year. The question more is, what would it take to drop back to 1.25? What it would take to drop back to 1.25 for me would be if it breaks below this red line. If it gets below the red line, closes below the red line, I will that week. I will lower it. If this holds and then pops, in order for it to stay at a 1.5, it actually would have to get above the red line. If it just hits the red line and stays inside of that, that would also cause it, right? It's got to really kind of hold this trend. So it's got to get above and into this so that I can move one of these lines down, right? It's holding up right there for now. And if I put a second one, I don't know which one that would be. It would have to hold this up and then bounce back higher, right? You can kind of see where it would have to get. So I'm going to keep it at a 1.5. Give me a sense. Where's everybody at? Are you a 1.5? Are you a 1.25? Are you less than that even? How's everybody seeing it? 1.5? Okay. So keeping it at a 1.5. Now the AI is at a 1.25. Let's see if it kept it. Ooh, it dropped. There's no structural. Okay, so let's read it. It pulled back modestly from last week's high, producing a small reversal candle near the upper boundary. The broader structure of higher highs and lows is still intact. A trim from 1.25 to 1. The trend remains bullish, but it suggests a pause. I don't know. I'm not gonna. I'm gonna mark it. I feel like it's a little bit deviating from the intent here. The intent is not to measure the week to week, but to measure the overall trend. I might have a conversation with it, not to change the score, but for going forward. I'm going to leave it at a 1. I disagree. I disagree. One candle can't change it to a 1. Otherwise, it would change its score here and change its score here. Right? Time to educate the AI. Amen, Tony Z. And Steven agrees. I would maybe do it now because I do think it's off, but I'm going to leave it. I'm going to leave it for now. I'm going to have a conversation with it later today and help it understand what we're trying to accomplish with that. So, okay. And I'll tell you what, it was a 4 last week, and I was a 5. We were a 5. And overall, I felt it maybe caught it a little better, but let's keep our eye on it and see. Because I raised my score, and then the market had a pullback. Now, that happens, right? We aren't trying to predict the next week by saying, oh, our score went up, so therefore next week should go up. That's not the intent. Right? That's not the intent. But it is interesting that it lowered its score and then the market struggled a little. I think that's peripheral. I think that's but it is interesting. I think it encourages us to think about it. Okay, fair enough. 6 month. So you can see we were here. 1, 2, 3, 4, 5. So the first day stayed the same, and then we dropped, no volume, stayed the same. Then we dropped, but we didn't have, did we get what we needed here? No, it was very close. This day was interesting right here. Let me get a calculator up. So we had, Steven says we did get the volume. Let me see. I'm going to put this here on 11.6. Am I on 11.6? No. Why can't I do this at the same time? So 85,035,298 divided by 81,415,821. I didn't think it made it. It did not make it. It did not make it. I got 4.44%. Maybe I'm not doing that right. Let me check my math. 85,035,298 minus 81,145,821 divided by 81,145,821 equals 4.79. 4.79% volume. That is a no score. It would have been a red candle. Then we did get volume. Then we did get volume yesterday, but we closed flat. It was a hammer. So I'm gonna leave my volume score probably alone when the time comes, but let's do the short term first. Okay, so let's print screen. Let's bring it over. Let's get a picture. And then we'll talk about our score. Copy. And let's go in now. Short-term analysis. So last time I did let it reassess on long-term. I'm going to leave it alone and I'll have a conversation with it. Here is this week's chart for analysis. 1109.25 for reference. Boom. And go. I feel like maybe we did pull back all the way back to these lows here. Let's get some drawing tools. Let's make it straight lines. So we had been scoring this so positively, and then we're like, hey, we got above that. And this was like the lower end. And you'll notice we kind of got right back into that. I think I'm going to lower mine right back down. I think it dropped enough that I'm going to take mine back to a 1.25. Now, he was already a 1.25. She, he, she, they, it. It was already at a 1.25. I'm like, hey, let's give it credit for the breakout, but then it couldn't hold all the way back down to the bottom of this range. Okay, Steven also dropped his. Did you drop yours this week? That's probably the most important thing. More important than what your final score was what was your movement, your delta. Did you go up or down on this? So I'm taking mine back. Let's see if ChatGPT, that would take it down to a 1 as well. Let me see if it did. I'm thinking. I already find myself starting to predict what it's going to do. Oh gosh. Rationale. The short term has weakened notably after reaching a new high. It sold off sharply. Undercut the 50-day. It didn't undercut the 50-day before rebounding. That rebound is constructive, but the loss of higher low structure, clear profit taking down. Oof. It remains slightly bullish, but continuation below 665 would confirm a neutral. This is out of 3 points total. I feel like this is a hell of a drop. You have it scored to almost neutral. Reassess. Reasses? No, I meant reassess. I don't know what reasses is. Okay. Now it's a little confused. Last week was a 1.25, not a 1.75. Okay. I feel like that's better. It was a way too high. I mean I accept that. I probably should go back and do the other one too, but I'm not going to do it. I'll do it after the fact. You get one like midweek correction, and then we have to like sometimes intervene. I do want you to see, AI is fantastic, but look at its limitations. I mean, we've given it a pretty good foundation to work off of, and it still kind of struggles. So it may take several months before it really gets into a position that it does what it's intending to do for us. But I think it's worth it to put the time in. Okay, so I'm a 1.25. It's a 1. I stayed the same on my long term. It dropped 1/4 point. We both dropped 1/4 point. Let's go see what volume has to say. It has to learn, keep teaching it. Agreed, Tony Z, right? We can't just expect it to just like know what it's doing. And that's kind of the point. it's an interesting thing because there are a lot of services out there starting to like talk about AI and trading. And there's a lot of fool's gold out there. You know, AI will never trade for us. It can help us. If AI ever traded for us, then everybody could turn it on. And then AI is competing against itself. And if AI starts to compete against itself, then it's still going to have like, well, who's got the fastest, most adaptive model? I mean, it's an interesting inclusion as a participant. When we had the well, I mean, and you'll see people, you know, talk about like what they think it can do. Vantage Point is like they've talked about theirs being AI before AI started coming around as popular as it was. But it's, you know, like when you say, well, what do you mean it's AI? What does the AI do? Like what does it do? Does it make the decision? Does it analyze for you? Does it, right? Like, so I'm going to look into that one, Stephen. Do you know what the AI component does as far as that goes? Vantage Point is all analysis. Yeah, it's charts. They call them AI charts. And I've used them. I've actually taught on them before, and they're no different than any other charts. I'll tell you that. You don't know because it's, yeah, okay, fair enough. Expensive. All right, let's get to volume. Let's take this down to 1 month daily. And this is another tie. Boop. So it tied here, just barely down, and you can see the next day up. Here we didn't have volume. This was very close. And then this one held. It's a hammer. That's exactly what I would expect to see. I have volume at a 0 still. If you look backwards, we have one sell day, this big sell day about to drop off. Then we have a tie. Then we have a sell buy back and forth. I'm going to leave mine at a 0. Tell me where you are. If you look at where we started and where we ended, a little more downtrend than I have it. A little slopey down. Barely below flat. I'm going to keep mine at a 0. Tell me where you are. And then let's get AI to weigh in. Let me move this back. Let me change this back. Now we need volume. Okay. I feel like we're moving okay today. Let's go to volume analysis. If you blow up the volume bar, well, the number is listed right here, right? So like this is the exact number. So if you go here, the exact number is 85,035,298 versus 81,145,821. Is that what you mean? I mean, it's exact. So I'm looking at these numbers here to do my calculations, and those should be precise. Here is this week's chart for analysis. 1109.25 for reference. Boom. Ready, go. I'm going to keep mine the same. I'm a 0. Tell me where everybody else is on this one. Did we have anyone else come late that I didn't see? I had to shut down my participate panel, so I can't see if anyone showed up late. If you did, welcome. John. No, John, you were right on time. I saw you come. You got here right at the intro. That's good. Okay. Oh, so it went negative. A surge in volume accompanied by the sharp was clearly a seller-driven event. I don't think I agree. John went negative also. Okay. I'm going to leave it then. It's not about me agreeing. That's kind of the point. Okay. I like it. We're starting to get some perspective here. But I'm a little concerned that it's overreactive. And that is something that what's interesting is for years, literally, I was overreactive with my analysis. I had to, I would say it took 2 or 3 years for me to dial in my own weekly assessments to not be like, it's up, it's down, it's bad, it's good. You're like, holy shit, I can't keep up with it. But I think if anything, that's where we're going to have to kind of dial it in. It wasn't scored negatively. And that for me is where it's like, hey, we have a specific metric. I am going to give it a talking to during the week, and I'm going to remind it that we need at least 5% above average. Be stern. I'm going to give it a good talking to, a strongly worded email. No. That was funny, Tony. I'm going to remind it that it has to be at least a 0.5% gain or loss in order for it to actually demonstrate the conviction that we're looking to identify and to score. Due to John giving it a negative as well, I'm going to leave it. We're close. Well, I'll tell you what, you can see it's there's a big, you can see here, we were pretty much aligned. Yeah, this first one was not. I had to make a couple of adjustments, and I took them away just so I could see what its score was. But this one, we came back like intact. And there's a divergence where it went down a little, I went up a little. Now we're both dropping a little. Okay, fair enough. Minus 0.25. It is what it is. I am going to, just kind of give it some reminders and then see what happens, and we'll go from there. So let's move on. Makes it part of the fun. Major market analysis. Okay, so we're going to need 3 of these. Let me move this back over. I don't need this right now. One quick reminder to everyone. Next Sunday, our good friend and longtime member, Bob Walker, will be joining us to just say a little farewell. He's having some significant health issues that he said he barely made it through with, and he's now going to have some recovery ahead of him. So make sure you come and give him a good send-off. A good Market Watch group. We're going to give him the old name. Send-off. Okay. Major market is our most favorable major market. Let's reload. Okay. Print screen. Paste. Oh, I need this out of the way. This will be all right, though. Let's get you in for the 200-day. This week's charts for analysis. 1109.25 for reference. Okay. There's one. Looks great. NASDAQ in place in the where it needs to be. Even though the Russell's pulled back, it's pulled back and still ahead of the Dow on this time frame. 133, more of the same. NASDAQ leading. The Russell is in a very clear and strong second position, ahead of the S&P, with there's that chart, with the Dow lagging behind. We drop down to 66 days. And even here, you can see the Dow still lagging, but in line with the S&P. It's moved a little bit ahead, but we still have the Russell in a leading position. We still have the NASDAQ in a second position. We had to have a conversation about the fact that it's okay for the Russell to be in a leading position. We still consider that to be a strong major market positioning. But the way that it's scoring right now, I have a feeling it's going to drop its score. I'm going to keep mine the same. I don't see anything from the first three that's led me to change my score. It's still showing a major market setup that indicates a good appetite for risk. We haven't now. Let's drop down to the 22 that just sort of looks at the road ahead, and that's concerning. If there was a tie, I would drop mine, but there wasn't a tie. But this is concerning. The road ahead is looking a bit more defensive. I don't know if it's going to score it that way, and if it does, I'll probably be like, wait, that's just for tiebreakers and to give us a look ahead. Let me bring this over, drop it in, ready, go. Let me come back. I want to hear from you guys. Did you keep yours the same? Are you still a 1 if you were a 1? Have you dropped your score recently? And if so, when? Was it this week? Was it last week? Dropped it because Tech and the Russell were not in the lead. 2 of the 4. Oh, the first and the last, you're saying? So remember, for me, I don't score the last. I use the last to help score the first 3 when it needs help. And I'm okay on the 200. I mean, it really fell out of leading back here. So did you drop it back here when this first, or just now? I mean, I can see what you're saying. I can see that. Okay. I'm going to leave mine the same one more week. I think ChatGPT is going to be a 0.75. Let's go see. Ooh. The Russell has lost. Blah, blah, blah. Okay. Clearly favors. Down from a 1 to a 0.5. That's a big drop. I am going to say here, remember, we don't score with the 22 day unless it is breaking a tie. More of a look at the road ahead. Maybe too much drop in score? Question mark. Too dramatic, yeah. Let's see what it does. Did anyone else drop theirs to a 0.5? I feel like that's undervaluing it. So I do think 0.75 is reasonable. It's thinking about it. It's telling us what it's thinking about. So I'm going to leave mine alone. Boy, the market, the model is definitely wanting to drop it out. is out of line with the strength that you have. Yeah, I agree. I agree. I think that's a. Well, come on now. Give us our score. Give us our score so we can keep going. You're right. It's just a heads up, not a driver. Oh, rationale. Okay, so it actually kept it as a 1. It was really overweighting that 22 day. Russell leads with the NASDAQ in second. Dow lagging. Textbook full risk on. 133 confirms that structure. Breadth remains bullish. Watch for items for next week. Downgrade only if Russell slips below the S&P on the 66 or Dow climbs into the top 2. Okay, I actually agree with that. That's a good looking forward continuity note. I thought it might have only given back a quarter of a point, but it seems that it was significantly overestimating the final chart as the scoring chart. I agree with that actually. So I'm gonna leave it. It's a 1. I'm a 1. Sector rotation. Okay, that was a pretty good conversation to have. Let me make sure that this is fresh. Let's take a quick screen print. Bring it over. Get a copy. I wonder how long we'll have to keep giving it reminders as it goes forward. Okay, so let's go to sector rotation. This week's charts for analysis. 11:09:25 for reference. Boom, there's our first one. What do we have? Technology still clearly leading. Clearly leading. Then we have communication services. Is that utilities right there? I believe it is. Who are you? Utilities. So utilities dropped, but it's turning back up. Communication services dropping. Here's the market. Industrials is trying. Discretionary is down here. Financials is down here. Okay. Let's go to 133. 133, we only have technology. But remember that technology by itself can give us a quarter of a point. By itself. I don't need anything else to participate besides technology. So if technology's there, it can have a quarter. And I believe that's where we were last time. Let's give it the second chart here. Who's close? Discretionary's close. We talked about that. Communication services is kind of struggling. And industrials is close. Okay, so let's see if anybody can get where they need to add when we come into here. What do we have? I don't know. Technology's in a leading position but dropping. Healthcare's just kind of sitting up there. Energy's trying to move. Discretionary tried but couldn't hold on. I think it might score to 0. And I don't know. I might agree. I mean, technology's still in a leading position, but it is dropping. I'm going to leave it at 0.25. I'm going to leave mine at 0.25. Let me get a picture of this. Where's everybody on this one? Does anyone gone to neutral? Has anyone gone less than that? Bob says he's keeping his at 0.25. There's still just ever so much a hint of that bullishness with technology leading. Healthcare is interesting. It's only in one spot. It's not like we have consumer staples or anything, you know. And let's go 22. Did you mean 0.5 to 1.25, Stephen? I found it confusing at times. This is a very confusing one. I agree with you, Sandy. This one is very confusing. There's not a lot to like latch onto from patterns other than technology leading. That's been a pretty consistent. I do like that discretionary is pushing into a leading position on the 22 and that technology held on the 22. So I feel like that's useful. God, I thought I was going fast. Although, yeah, we're almost done with this one. Okay. Boom. It does not know what it wants to do. Am I all the way right? Oh, shit. Not on this one. On the other ones, too, did you think, Bob? I might have to go back. Son of a gun. Son of a gun. I'm pretty sure I was just this one. I need to get that right, actually. Damn it. Good call, sir. Yeah, that's pretty distinctive, actually. I uploaded the wrong 22-day chart. Here is the right one. Reassess with this context if necessary. Boom. I didn't even read it. I'm going to leave mine at 0.25, but I'm very, very close. Rationale, the 66 remains the deciding time frame, and it shows clear defensive leadership. Oh, no, Staples is not dominating. No, you're wrong on that. You're wrong. It did go negative, but Staples, where is Staples? Why am I, shit. Staples is purple. Staples is at the bottom. And technology is still on the 66. Staples is actually at the bottom, and tech is still in a leading position. Yes? Okay, let's see what it does with that. The nuance changes the interpretation slightly. Defensives are showing relative firmness, but it's not a full rotation into defense, more of a narrowing leadership scenario. Tech is still the growth leader without broad confirmation from others. Okay, I accept that. I'm going to leave mine for one more week, but I was leaning that way, if anything. So it stays a 0. I stay at 0.25. And now the VIX. And then we'll get to it. Okay. I've got to figure out how to go faster on this. We're almost done though. VIX. We'll go through our list. Trading rules. Don't forget that. Trading rules. We're not going to have any time to go through. We're not going to have time to go through the trading plan. But let's get this back to 6 months. But we will this week. Print screen. Come down. Here's the VIX. I'm not going to put the stochastics in, only the VIX itself. Let's go here. Let's go here. Let's go here. This week's chart for analysis. 11:09:25 for reference. Boom. And go. My score. My score is going to stay the same. This is a lower high if it turns. It hasn't turned. If it turns and we get a lower high, I'll actually raise my score a quarter of a point. If it gets where 20 is the high, now when this got to this point, it was concerning, but we dropped out of it pretty quickly, then came back up and had a much lower high point. So I'm going to leave mine at 0.75. Okay. And the AI model says down from last week's. The VIX rebounded, closing above 19. The move above the 50 and the formation of higher lows. Was it a higher low? I'm not going to say that it was. Reflecting renewed caution. While not in panic, this rebound suggests volatility is rebuilding. Short-term pattern resembling the early stages of a fear expansion. I mean, its rationale is okay. I'm going to leave it. I'm going to leave this alone for a week and see what happens when we come next time. Okay. Now here's the deal. Maybe you could tell it can leave the score as is. I mean, it had pretty good logic. I'm going to let it go one more time. A 1 point drop this week based on... Here's the deal. If this week we go into like a crazy sell-off, I'll tell you what, we'll all be like, oh shit, AI was on it. If not, we'll dial it back in to see if we can't reconverge how we score. I don't think this is a 1 point drop. And that's where I'm saying a bit of an overreaction. That this typically is not going to be we lost 1 point on our market posture here, right? I think most of us know that we try to have a more stable, and that's going to be my conversation. I'm going to talk to it about stability of analysis, where we're not trying to jump up and down half a point every week and in a reactive fashion, but really try to smooth the analysis. So yeah, there's 2 or 3 indicators that I think are going to need to have that conversation, but it's still bullish. It did lose a point. It does have some caution that I'm not seeing. It's pretty interesting because I lost a quarter of a point and it was close. If the VIX closed above 20, I probably would have dropped it. So that could have dropped a quarter, but it didn't. This was close. Major market didn't. I mean, I was right on the bubble with a few of them. So for the fact that it actually made the turn, okay, I respect that. Is anybody lower than ChatGPT for their analysis? Steven's in the middle. He's a 4. Am I the highest? Am I the most bullish? Is anyone higher than me? I feel like I might be the most bullish. And I'm like, ooh, Scott, you should check your bias, buddy, and see if you're wanting to be bullish. I do want to be bullish, but let's go to the watch list and see what it confirms. If we're still bullish, we should find some great stocks. We should find some nice things. So let's go through the watch list and then we'll wrap it up. So I apologize for taking extra time as usual. Sandy's a 5. Okay, so Sandy's right there with me. Apple absolutely looks fantastic. Still tradable. Looks great. Setting up. Would love a trade this week. Apple is a huge tech leader and market leader. Amazon, Looks fantastic. Huge market leader and consumer discretionary leader. Looks great. Both of these look great. ANET, I'm going to say no. It's a little too far for me. I'm not interested in that one. APH is still a yes for me. Boom. 3 out of 4 in the beginning. Still look good. AVGO still looks good to me. Holding the 50 gives us a hammer. We could definitely come out of that strong. AXP was tradable. I mean, you could have put a trade on AXP. BAC still looks tradable from financials. Excuse me. Pardon me. I'm going to say no to Citi. Citi's kind of going sideways now. I'm going to say yes to Caterpillar. We like industrials. Looked like it could have been a signal almost right here, and then it just kind of hiccuped a little bit. Okay. CCJ, I'm going to still give this a maybe. I mean, it was a big pullback for sure. Earnings kind of accelerated the last little bit, but it held the 50, higher low. CCJ still on the list. Okay, so we are in the C's, and I have 1, 2, 3, 4, 5, 6, 7, 8 stocks on the list looking good. I think that's more representative of a 4.75 holding than a 3 dropping for the last 2 weeks. That's just me. CLS still looks good, still setting up. Higher highs, higher lows, good trend. COF, no. Coinbase, no. Cisco, yes. It does have earnings, so we're going to have to be careful and mindful, but let's keep an eye on it. Delta, no. Diamonds. I actually feel like I'm going to put the DIA on if I wanted to trade something that's quasi-defensive. Maybe it's a bounce here. Ford looks good. Still looks good. It's held up. It's advanced from our entry. So, yeah, absolutely. GE. What am I missing? Why does GE say it was down 15 points, but it has a bullish looking hammer? What am I missing here? And this says 290 and this says 307 by 308. What am I missing? I'm putting it on still. Is that weird? Is everyone else just showing the same thing? What are you guys seeing for your GE? That's very funky, actually. I'm going to look at one thing. Okay, let's look at GE. Come on, GE. Pull on up. $307 up 2. Got it. Loading chart. Let's go 6 months. I mean, it looks like it's all held up. Am I wrong? Anyway. Okay. Okay. GE on the list. Gold. I don't know. Gold looks like it's kind of losing its luster here. If it rolls, be careful if you took one. Google still looks good to me. Goldman, flat. Robinhood, not yet. That's chopping around after earnings. I'm going to say let's watch that one. Howmet still looks pretty good out of industrials. The plane crash. Oh, the plane crash was crazy. I worked for UPS when I was in college for a few years, and I actually worked at the airport, not in Louisville. That was a hub, but Salt Lake City is a secondary hub, and I worked in the next day air, so I would have planes come to and from Kentucky all the time. Interesting. Did they get hit because of that? When did that happen? I can't remember now relative to... Oh, they look fine. Friday. Yeah, it looks fine. Okay, back to the list. IBM. IBM gave a signal. Now it's in a hiccup. I would actually potentially trade the hiccup. On the list, Intel. Looks great. Looks great. Looks like it's trying to hold, trying to turn. That's a possibility right there. IWM starting to loose. It's fighting to hold the 50 there. Fighting to hold the 50. If it doesn't hold the 50 next week, my major market will drop, I believe. Lumentum, strong but not tradable. Yeah, let's put it on the list just in case it has a flag type pullback this week, I guess. MasterCard, no. Meta, no. Morgan Stanley, yes. Yes, still viable. Microsoft, no. Micron, yes. Netflix, no. Northrop Grumman, no. Nvidia, absolutely. Looking for another Nvidia trade. I know we all are. Palantir, that's a maybe. That's a maybe. I don't know, with the gap down. I'm actually going to hold off on that one. Who likes it? Who likes it? I'm going to give this a 1 vote, add it or not. First one to give me a yes or no. Steven's in it. We'll call that a yes. I'll put it on the list. I'll put that on the list, Palantir. QQQ. Looks great. Reddit, no. Rocket Lab, no. Silver. Reddit Rocket Lab is what's telling me that communication services will need something new when we start to see some momentum there. Sandy said no. SoFi. I'd still give SoFi a yes. It's trying to hang on. Tesla. I'm not a Tesla fan. TSM. I would still put TSM on the list, but I like NVIDIA better. Intel better. Uber. No. You guys, who's still in Uber? What are you doing with it? It's holding support. Real sideways overall. Maybe looking for a bounce there. Walmart. Okay. Walmart. I'm a no on Walmart. I need Walmart to go up, down, up. It's got to get above the 50, pull back, and then hold the 50. Real quick peek. Materials are down. Communication services are down. Don't forget to water your bonsai trees, everybody. Communication services down. Energy picking up. Financials. Come on, financials. You can do it. Industrials trying. Holding the 50. Looks okay. Technology still looks good. Staples looks terrible. Utilities. Maybe making a surge again. Healthcare, strong, but hitting some resistance. Consumer discretionary, back above the 50, trying to move again. Okay. I don't know. As I look at it, I might be a little high. Maybe I should be closer to a 4. I'm going to leave it though for this week and see what this week brings us. I'm feeling like if we could just get that government shutdown over, Santa Claus will come to town. That's what I'm looking for here. So I hope the overs got it this week and that they figure out somehow a way to. I think it was a good plan. Fund the credits. Fund the credits for this year. There are a lot of people who will lose healthcare if they don't have those credits, and will just elect not to. So fund the credits for another year, and then Republicans give us the plan. You've had lots of time. Give us a plan. Give us a plan. Well, if it's so bad, then it should be pretty easy to come up with another plan, right? But we got to have that healthcare in the country for sure. Okay, that's it for me. It's great to see everybody. AI was interesting this week. Let's go, Santa. Amen to that, Tony Z. I'm looking for it, man. November, December should be our months. Finish the year strong. That's how we did last year. I'll see you guys in the morning. we'll transition our market posture to our trading posture. It's interesting, the divergence we had with AI, and we'll see how it plays out this week. Have a great rest of your Sunday. As always, happy trading.